going through. So I'm still on CRT. So um, welcome to the second video. Today I'll be dropping another video still on this CRT, but I'll be going to a daily candle this time. The other video was on an hour. That was 1 hour candle we used. So this other candle, this other video will be going for a daily candle. I've told you that previously that what markets works with liquidity. So what drives the market is liquidity, imbalances and favorable gap. That's one. So on this video, if you watch clearly with me, this is on 1 hour. On daily time frame, 1 day time frame. So this is kind of projecting upward somehow on this. So we're working with trend also. This is kind of projecting upward. So we'll be looking for a buy setup basically, so we don't get hurt. So okay, let's go to the recent levels in the market. We have what to call PDRA. We are that's let me just say key zones. Let me say key levels. We have what we call key levels. That's demand, supplies, fair value gaps. These are key zones we ought to check out for when we are doing our analysis. So on the daily time frame, we're having a fair value gap here between this place and here. We are having fair value gap here, and since we are going upward direction, we also have a recent high that the market is targeting. I can likely call this LQ. That's my liquidity. Sorry. So we have a fair value gap here. After the market traces upward here, we had a fair value gap when we expect market to tap into it and continue to take out these highs. Um, so let's see what happened. So quickly, let me drop this. If you're doing your analysis on CRT strategy, basically there are things you need to take note of. Let me drop it. Um, if you're using your range candle on weekly time frame, if you're using your candle on weekly time frame, your entry should be on the 4 hours. Why? If you're using daily time frame, your entry should be on 1 hour, and if you're using a 4 hour time frame, your entry should be on the um 15 minutes or 5 minutes, and if you're using 1 hour, your entry should be on the 1 minute, we'll call it 3 minutes or 1 minute. Sorry. These are what you need to take note of. They are very important because we don't just get into the market, we have our reasons why we got into the market. So we just get this at the back of our mind that this is what we are working with. So if you're doing your analysis on the weekly time frame, so if you're using your weekly time frame as your range, you're expected to use 4 hours as your entry. While on daily you're using 1 hour as your entry. On 4 hours you're using 15 minutes, and on the 1 hour using 3 to 1 minute. So quickly, this is daily candle, like I said earlier. So what we will be using here is 1 hour as our entry mode. But another thing, briefly, let me say this. If we observe this candle, we have momentum candle here and weaker candle here, like candle with larger body and also have candle with thin body. I will explain something for you here quickly. This is our previous day low. Sorry, I'm using this two bearish candle because we are looking at this fair value gap. So these are previous day low, and these are previous day high. I'm just using this. Okay, this candle is what we are working with, and this other zone also, because this is a low before the fair value gap. So we can call this daily FG. These are daily FG. Just pay close attention. These are daily FG and these are recent highs. So check this with me. This is on weekly time frame. So you know the reason why we are targeting what we are targeting. On weekly time frame, we already have um a CRT formation here also. This is why we are targeting these highs. Alright, these are range low and range high, and a manipulation candle here that's taking out this low, and this candle printed to this point. So we are just expecting these highs to be taken on this week, right? So that's why we are expecting that. Let me drop down to the daily candle. So now we look for a possible entry on this key level, call it key zone, which is a fair value gap level. So we monitor the markets whenever we discover things like this and the market is dropping down. We monitor the markets at the verge of getting into this fair value gap, and also the breaking of this low. So we monitor it. Let me drop down to a lower time frame, to 1 hour, because that's our entry level. Okay, these are range high and range low. So let's see this together. Immediately the markets broke the structure here downward. Immediately the market sweep the liquidity downward here. We observe something. The market start going back upward again. The market start going back upward. But this is a long bearish candle that broke this low, which was the previous low liquidity that was resting here. And we observe the bullish candle 1, 2 printing, and the third candle printing to close above this candle, right? So once we've observed a sweep of liquidity here, you can call this X. Sorry, can call this X. Let me put it at the middle. Can call this as liquidity, and then we had a reversal to the opposite direction to close above this candle. This should be our entry mode 1. This should be our entry mode 1. Then these are range high, initial range high, and these the previous low also that was swept. When this low was swept, there was no reversal here between this zone. So it was until this other zone was swept, and we remember this is a fair value gap we are already in, and the market reversed this way. So we are expecting a buy already. This is what happens on the 1 hour candle, or call it daily candle. Set your stops just below here, and then target the range high. This is one range high. This is your number one target on this. Then your second target will be the time-based liquidity. I'm coming. try and find this. Okay, let me go back to daily time frame so you can see what I'm saying. These are initial target. Liquidity here is what we are targeting. So you can extend your take profit level to this high here. This is giving us minus to 4.9. That's approximately minus to 5 RR. So that should be your target, right? But then if we are using that to be our target, then let's measure between here, which was our low, and our high here, and then 50% of it is here. So that's our 50%. So our first TP should be here. TP1 should be here. Let me go back to 1 hour time frame. Our first TP should be here, and our second TP should be here. So this is just it on daily time frame. But what you have to do on this, you just have to wait, allow the market to play out. It's going to take some days. In most cases, it's going to take days. When you analyze on daily time frame and get your entry on 1 hour, it's going to take days. But definitely, it's going to get to your take profit level. But what you just have to do is to be patient and wait for the market to play out. Um, it's real, because market is always right. Just do analysis, allow the market to play out. That's just it. So it looks very simple, but you need to pay more attention to it so that I can get more results. So that's just it. So what you do basically, the liquidity that we're seeing here, you monitor. This was the liquidity one. Secondly, a break of that liquidity downward. Then when it breaks, if the market is able to push above the candle momentum candle that broke this low, then that candle high should be your entries. That last candle that breaks it, this is applicable to all time frame, right? Is applicable to all time frame. I say 1 week is a 4 hours entry, daily time frame is 1 hour entry, 4 hours is 15 minutes and 5 minutes entry, then 1 hour is 5 minutes and I'm sorry, 1 hour is 1 minute and 3 minutes. So if you're on daily, we step that to 1 hour. This is what we got. So if you can do that on what they call it again, on the different time frame, you still get same results. But mind you, always work basically with the key level so that you can get better results. If you don't see this, don't execute any order. You can see something like markets trying to form a higher lows, and then will still drop and will not break that candle. If it keep dropping, don't take it yet until you see a reversal that is able to break the candle. Even if this does not form immediately after this liquidity, if it's dropping downward, if it can still reverse, then you take the as your entry, join the market from there, target your horizon. That's just it. All right guys, this is also a range and a time-based liquidity CRT. So it's not just three candle CRT. Meanwhile, I call this time-based liquidity because one, we are expecting these highs to be swept. That's why we are still expecting our target to be at this point. So this is why this is time-based liquidity and it's on daily time frame. So that's just that. And we watch out to see before this weekend these highs will be taken out. So that's just that. Okay. So bye guys. I'll still do a continuation video. Because I need to explain this thing to your understanding. All right.